Are you looking to take your crypto day trading to the next level? In this video, we're going to talk about optimizing RSI settings for crypto day trading. And the RSI, or the Relative Strength Index, is just a momentum indicator. It's an oscillator. It helps you analyze market trends and strength, and that can help with your overall trading decisions. So let's just talk about how it works. So it was developed by a guy named Wells Wilder, and it measures the speed and change of price movements on a scale from 0 to 100. And generally, values over 70 indicate overbought conditions, while those under 30 suggest the asset is oversold. And when you get overbought or oversold, we're looking for the opposite move in price. But in crypto, you might want to tweak these settings to better capture the rapid price movements that happens. And it's also important to use these with other indicators or price action to filter out the signals that aren't as strong. So what is a good period setting? Well, a good starting point for any indicator is just a standard setting. And for the RSI, it's 14 days or 14 periods. And this is going to give you a general sense of the sentiment for different coins. But when we're talking about crypto, you probably want to experiment with shorter periods like 9 or even 5. This is going to make it a lot more responsive to the price changes. And to find these settings, I really recommend you backtest your strategies, obviously using historical data. And you're going to see which period has generated the most accurate signals for the coins that you're looking at, the time frames, and the style of trading that you have. Now, oversold and overbought levels, again, the classics are 70-30. Some traders use 80-20 or even 60-40. It just depends on the conditions of the market and their personal risk tolerance. So if you're a range trader, you may look at 60-40. It's kind of tight for my liking, but some people look at that. But just keep in mind that just because the reading goes above 70, doesn't mean you should just sell. Or if the reading is below 30, it doesn't mean you should just buy, right? It's potential reversal zones, but you got to analyze them in the context of the overall trend direction and any other indicators that you're looking at, especially price action. And when it comes to time frames, the key is to choose the one that aligns with your strategy. And if you're looking to pinpoint precise entry and exit points within a day, you probably want to look at intraday charts. Now, the 1 hour to 4 hour time frames, these offer you a pretty good balance, and they're long enough to filter out market noise, but they are short enough to capture actionable moves. Now, you can also use the daily charts to gauge the broader market context, combine multiple time frames. There's nothing set in stone. But if you do work during the day, look at daily charts for your setups for your trading plan, and then dial into a lower time frame to find your entry point. And you'll probably use pending orders if you can't watch the charts during the day. Now, one of the most powerful signals you can get from the RSI is divergence. Now, bullish divergence, that just happens when price makes lower lows, but the RSI goes into higher lows. Now, this suggests a potential uptrend is forming. The momentum is changing. On the flip side, bearish divergence, that happens when price hits higher highs, but the RSI is now showing lower highs. That's a possible reversal to the downside. Now, convergence, that's when the price and the RSI are moving in sync. That just confirms the strength of the current price movement. Now, as we talked about earlier, the markets in crypto can be highly volatile. So to account for this, you might want to shorten the standard 14-day period to be more responsive. So 9 periods, 5 periods, that can help you spot changes a lot faster, but just be aware, this can also generate more readings of overbought and oversold and divergence. So you got to be careful with that. But you just got to strike a balance, right? You got to find settings that are going to work for your strategy. And remember, it's just one tool in the toolbox. Think of other indicators like moving averages, Bollinger Bands. These can help you weed out lower probability trades. So we're going to look at a fairly simple approach to using the RSI in trading crypto. And the first thing we want to do is make sure on a lower time frame. Here we're looking at the 1 hour chart. Put the RSI indicator on your chart. And for the settings, we're going to keep the overbought, oversold zones at 70 and 30. We're not going to change those. For the inputs, we're going to drop the RSI length down to 9. It's going to make it more responsive when price is moving. So as we're set up here, the first thing you want to look at is their overall trend. Obviously, here we're going down. We want to be looking for shorts. And all we have here is just a series of lower highs, lower lows overall, which is a downtrend. We would not be looking for any long trades. Pay much attention to the oversold conditions here. And you can see that we don't get a whole lot to the downside until we get over here. Different ways we can enter these trades. We are still looking to the downside. We did not break this swing high. And because we did not break that swing high, we are still putting in the pattern of lower highs and lower lows, which is a downtrend. And how do we get into this trade? So many different ways you can get into trades. One of the easiest ways is to draw trend lines. Trade the break of a trend line to the downside. You put your stop above the swing high. When you're looking for profit targets, you can look at 1 to 2 times your overall risk on the trade. So just by looking at this chart, you can see a pretty major area here where price has rejected twice from this zone. Price then puts in a pretty strong reversal type of candlestick. You can see that here with the long shadows to the downside. They're pretty good for reversals. You can see that we do dip now into the oversold area. Would you take that trade long? Well, we're still in an overall downtrend from a structure standpoint of lower highs and lower lows. This did put in a slightly lower low, but all this is here is just a test of this area here. For if you are an aggressive trader and you see this dip down below 30 and you see the reversal, a simple way to take that trade to the upside, just buy stop the high and look to take profits around the previous swing high. Those are pretty quick trades to do there. But if we're staying more on the conservative side of things, what we do see here is we do see that price has broken above this last swing high. We've now put in a higher swing high. For an uptrend, we want to see higher swing highs and higher swing lows. Now, you do not know that you have a higher swing low until we start moving back up. So this is all guesswork. Is this our low? We don't know. But now you can see we kind of transition into an uptrend, sloppy. There's not much going on here. We don't get any trades down into the oversold area. So you would not have any trades here from Friday to the date of this video, which was the Tuesday. So that's nothing to worry about. Trades will come and go. There's a lot of coins that you can trade. However, when you see these kind of reversal candles and you've got this big move to the downside, it doesn't hurt to consider taking a shot in the opposite direction against the trend, because eventually we do break from a downtrend to an uptrend. The way you could trade this without looking at the 70-30 zones is this is the price zone that got broken. Now remember, support and resistance areas, they're zones. They're not particular one price point like $64,204. That's a zone in that area. And you can also see another swing area this way here. This is an entire zone that price is reacting to. So when this kind of stuff happens, when you get this breakup, it's basically a change in direction, because we did put the higher swing high in here and a pullback. Even though we do not get the 70-30, we can still take a break of this trend line to the upside. And that's also a trade that you can take as well. There's so many different nuances to trading. There's not one size fits all. But to break down this particular trade, we were in a series of lower highs and lower lows. We're in a downtrend. Price comes into an area of support, puts in a strong reversal candlestick. Price does kind of dip into the oversold area just by a little bit. Price comes up, breaks the prior swing high, pulls back to a zone of support. It was resistance, now turned to support. You're looking for a break to the upside. There's your trend line break to the upside. It's just a very simple approach to trading. It doesn't have to be overly complicated. To wrap it up, the RSI strategy on the 1 hour chart, not a bad tool to consider testing when you combine the RSI with other tools, like again, price action, trend lines, and adhere to proper money management rules. You're going to enhance your chances of success hands down. But just remember, there's no strategy is going to guarantee you success at all. So always use risk management practices. Keep learning and adapt your strategy as you gain experience. I want you to like this video, subscribe, and we'll talk to you soon.